Okay, let's drill into Tesla's earnings. Let's have a look at the stock. The company did post an earnings beat for its fourth quarter. You can see the shares up around 1%, and it is going to discontinue its Model S and X vehicles and invest $2 billion US in Elon Musk's artificial intelligence startup, XAI. Let's get more from Itay Michaeli, who is equity analyst at TD Securities. Thank you very much indeed for joining us.
Thanks for having me.
What jumped out for you with these Tesla numbers? Start with the profit, if you would.
Sure. I think the number one takeaway is that Tesla delivered a resilient quarter in the midst of challenging EV fundamentals, both in the U.S. post the expiration of the tax credits and just a globally competitive market, particularly in China. The automotive gross margin, excluding credits, did expand by a couple hundred basis points sequentially. This marks now the third quarter in a row where Tesla's gross margins have been recovering. So overall, we thought it was actually a pretty good quarter and comfortably ahead of consensus. And that kind of helps set the foundation for the company, for sentiment around the company to improve as Tesla enters a period with potentially significant catalysts on the autonomous and robotics side.
So they're dropping their two oldest vehicles, the Model S sedan and the Model X SUV. But do they have enough new product to make up for that?
They do. The Model 3 and Model Y, a substantial portion of the volume today. The S and X, well, certainly kind of the original vehicles that drew Tesla's brand and success are now a very small part of the overall volume. And they're going to, of course, repurpose that capacity. But increasingly this year, we do think autonomy will become a central role, frankly, for driving Tesla's vehicle demand. Oftentimes people talk about the autonomy separate from the EV side of the business, but ultimately they will be, in our view, very much interlinked, just given all the various features the company should be able to launch once they go to fully unsupervised FSD, and of course, eventually integrating those vehicles with the robotaxi fleet as well. So we think going forward, the autonomy will become not only an incremental source of revenue and profit growth for the company, but also potentially a major driver of demand going forward.
So you have a buy rating on Tesla. What is the main thing that you think will drive the stock higher?
Sure. For us, a lot of it comes down to some significant catalysts in unlocking major opportunities within vehicle autonomy and robotics. You think about people. You think about Tesla as a car company, tend to think about their addressable market as selling new vehicles. But the real addressable market, in our view, is a lifetime revenue of vehicle generate and then incremental services even on top of that. In the U.S. alone, that's a $1.5 trillion market, and we think autonomy could help Tesla unlock major portions of this. And this is no longer like, many years out. The company did outline about 7 cities that will be launching just in the first half of this year alone for robotaxi. And eventually, we think unsupervised FSD will be integral to driving additional services and expanding all that revenue pool, alongside, of course, the robotics investments that they're making. And as I mentioned before, that should also drive higher EV demand. So we don't think the company is completely shifting to a whole different business model. We think selling vehicles will remain important, but that really drives our thesis, just given that we are in the here and now of some of these catalysts in the next few to several months.
Now, you may have touched on this, and I'm sorry if you did. Optimus, their humanoid robot project, is that a serious investment for the company? Are they putting big capital into it?
Absolutely. A lot of opportunity there. You're seeing a lot of companies also invest in that. So it is really forming into a sizable industry. It still is in the R&D phase, as Tesla mentioned on the call last night. They will be unveiling their kind of version 3 in the next few months. So we will get additional data points and momentum around Optimus. But the growth is still a couple more years away, but that is a significant opportunity. So if you think about this year as sort of the year more for robotaxi autonomy with some kind of incremental growth and development for Optimus. Next year and the year thereafter, Optimus, we think, can start to become a much bigger portion of that revenue growth equation. But it is equally an exciting opportunity as well for the company.
What about the fact, though, that China's electric vehicles are sweeping the world? Now, I know Musk makes cars in China, but are the likes of BYD and Chery a major challenge for him in autos?
Yeah, the Chinese market is very competitive. There's some really great product out there. Now, Tesla does not compete in every single price point, but even in the price points and segments they compete, there is heightened competition, and that's kind of what makes the Q4 margin beat so much more impressive, right? Because not only was there the headwind in China from a competitive perspective, as you bring up, but also the U.S. EV demand was more depressed given the pre-buy we saw in the third quarter ahead of the IRA expiration. So to see the gross margin expand despite lower sequential deliveries, I think kind of puts more ease at some of the concerns around how Tesla would manage this more challenging time in the industry. And if those challenges go away tomorrow, but kind of off a higher earnings base than previously expected, that does provide, again, the foundation for sentiment to improve as now kind of the AV and robotics catalysts really come into view.
Itay, thank you very much indeed. Itay Michaeli, equity analyst at TD Securities.